Hey everyone, welcome back to the Niche Pursuits podcast. My name is Jared Bauman, and I'm really excited about the interview that we have for you today. I just got done with Mohit Tater from Blackbook Investments. Now, we talk a lot about Blackbook Investments and what they're doing right now in the market and how they're working with both investors, large and small, the funds that they've set up. And it's really intriguing actually to hear about the benefits of the fund that they're working with for both the investors and for operators. We get deep into the numbers. So if you're interested in learning more about how the numbers work when you're an operator, how the numbers work as an investor, how this kind of business model works, you're going to love what Mohit has to share. But we also spend a lot of time talking about growing and selling websites. Mohit actually, way back in the day, failed to grow his own site from scratch. And so he turned to Flippa. And with his first purchase on Flippa, he grew it 5x in 6 months and sold it. So we get into the details about that site. We talk about how he built out his portfolio. And then he goes through and shares with us some how-tos or some practical tips for how to do due diligence on a website that you might want to buy. We also get into how to grow sites. He obviously has a lot of experience with websites and growing them. He has to grow those sites for the investors he has at Blackbook. And so he shares tips on how to grow websites, what he's seen work today, and how to make your site more attractive to buyers down the road. So if you're someone who's thinking about maybe selling a website, you'll get some value out of that as well. Again, overall, it was just a great interview. I'm really excited for you to join us. And so without further ado, let's dive in. Welcome to the Niche Pursuits podcast. My name is Jared Bauman. I'm your host, and today we are joined by Mohit Tater. Mohit, how you doing?
I'm doing good, Jared. How about yourself?
Doing very well.
Thank you for having me.
Yeah, welcome. Thanks so much for joining.
No problem. Pleasure.
How about you let us know? So let's see, where are you calling in from today?
I'm actually on the outskirts of New Delhi in a city called Gurgaon. It's like the second startup capital of India after Bangalore. So
Good. Well, good. I mean, today, you're the founder of Blackbook Investments, and they are a group that works with both investors and then website operators. So we have a lot of different things we can talk about. I think it's going to be a really interesting interview. We just had somebody who's in a somewhat similar space from Sam Bass from Chief Operators, who is on a couple months ago. So I think it's going to dovetail nicely with some of the things we talked about there. Why don't you give us a little bit of your background and bring us up to speed on where you started?
Yeah, so I started almost like 10 years back, 2012, and basically I was building websites since 2011. I started dabbling in online marketing, the internet IM thing, and all of that, and just trying to see if this whole thing works, if this is legit. And I could not, have any success in the first year and a half, 2 years when I started, because the sites that I was making from scratch, they did not end up making any money. So it was not easy. And I was like, okay, what else can I do? How can I go about it that, so that it works? And then I came upon Flippa, which is marketplace to buy and sell websites. And I could see that people are selling revenue generating websites on there for really low multiples back then, like 6x monthly, 10x monthly. So I was like, okay, maybe let's give this a shot. Maybe I'm not good at building things from scratch, but how about growing something that's already making some amount of money and then growing it from there. So I bought my first website for like I think a couple thousand, $2,500, something like that, and I was able to grow it quite well in 6 months, and I sold it for like 12K in 6 months, like 5x or 6x in 6 months. And then I just kind of I could see that this thing works. And once that was proven, I just repeated that process a few more times. Sure, there were a few duds I got taken for a couple times, but I did not lose hope, and I was just at it. And eventually I started building up a portfolio of sites rather than running just one site at the time. And I slowly graduated. I started buying bigger sites, bigger deals. And let's say about in 2014, friends and family, they were just wanting to ask me what I was doing and what was I investing into. So I told them this is what I'm doing, and they were like, can we also do this? How can we be a part of it? So I told them, okay, let's see, maybe we can buy a website for you yourself, and I can manage it for you, so it's passive for you, and I get a management fee, whatever, and you get a passive income basically. So that's how the idea for Blackbook was born, out of necessity. And then I started taking on friends, family, friends of friends, as investors. They would buy websites, as in I would tell them what to buy. I would buy it for them. They would put in the money, and I would do the management part basically. And that's how Blackbook was born. Yeah.
Wow. So you've been at this for quite a while. You've been in the website game
Yeah.
for quite a while.
Almost a decade. Yeah.
Yeah.
Totally.
Hey, let's talk about that first site that you bought and flipped on 6 months later. And what kind of site was it? What was the what kind of things did you do to it? I mean, I know this is a ways back, but I'm just curious, how you flipped that site on so quickly and for so much of an increase.
Yeah. So basically, it was a service-based website selling, Facebook likes and followers and Twitter followers, Instagram followers, all of that stuff. So so when I bought it from the seller, they were not doing any paid ads. They were just, getting a little bit of organic traffic. That's all they were doing. And they had only a certain amount of fixed packages on the site. So what I did was I increased the pricing. I increased the prices. I introduced higher value packages. And then I started paid marketing. And then I also reached out to people who I could see were, trying to grow their audience, by either doing people who were just putting themselves out there on these platforms like Instagram, Facebook, and they were just trying to improve and increase their audience. So I reached out to them with, my offer that I can help you increase your audience. So that's how I could, multiply the business, the income in short span of time. And after that, like 6 months, I just wanted to sell it to see if this thing works, if I can actually just sell it also. So the whole cycle is complete. And once that was proven, I was just hooked after that. So
that's pretty fascinating. I think a lot of website owners ignore paid ads as an opportunity to drive revenue, and that's interesting. You mentioned that you bought that site on Flippa, and that you went on to buy, many others. I mean, there weren't quite the robust number of brokerages available at the time to offer websites. Now there's a lot of Facebook groups. There's a lot of different areas to go to buy sites, but at the time, what were you leaning into to find these websites? Was it Flippa exclusively, or did you have other avenues that you were getting deals from?
Flippa exclusively. It was the wild west back then. I didn't even know of any other places where I could buy websites. So I just chanced upon Flippa. And once I bought a few sites from there, I was just, this, I'm getting good deals from here. So no need to look elsewhere. But it was tough to find the gems, the good ones from the bad ones, because I was just starting out and I didn't know much. I was like, okay, let's be very thorough with our due diligence. So yeah.
You're kind of, jump into the next point that I wanted to ask about, which is perfect. How do you vet, how did you, or how do you vet now? And I know we'll get into that with Blackbook, but at the time, as just a solo person building websites, how were you vetting sites that you were acquiring, and any tips that you could share about that? You mentioned that you got a couple duds as well. So you've had both sides of the equation where you've bought some really good ones, maybe some not so good ones. What are some tips you can share? And the reason I ask is because I think there's a lot of people probably listening that are in that boat where they are looking at sites to acquire. They're interested in it, but putting out all that money for a site where you just don't necessarily know everything about it is really, scary and difficult. So how did you go about vetting? What kind of things have you learned along the way with the good ones and the bad ones?
Yeah, so initially it wasn't two big deals. I mean, I was doing like 4-figure deals, like a few $1,000. So I was just, playing it by the year. There wasn't too much DD I was doing, as just trying to verify the revenue. The income was coming in, and verifying the traffic was legit, all of that. So that's how I started. And those were smaller deals. You probably didn't need too much DD on those. But as we have progressed over the years, our due diligence process has, of course, matured, and we have a process in place now where multiple people look at a deal and look at it from different angles, and they look at different things. Someone might look at the backlink profile. One person might look at the quality of the content. One person might look at the financials, all of that basically. So it's a multifaceted process now, and I'm happy to share tips now if you want me to. I can. So yeah, I mean, so it's all about verifying revenue. I think that's the first and foremost thing, is like if the revenue can be verified, the revenue that the seller is claiming, and not just verified, can it be tied to the site?
Right.
Anyone can verify revenue, show you revenue from anywhere. I've had, when I got taken before, like 8-9 years ago, the revenue I was shown was PayPal screenshots. Okay, and I took it on the face value, but I did not check if it was revenue related to that site. It could have been from any other site.
Right.
So
they could have gotten it from a different site or a
thing.
different source or something like that. Right.
Exactly. Yeah. Same thing with Amazon. You might be, verifying the revenue. Okay, this is the Amazon Associates tag for this site, and this is getting so much revenue. But did you ever check if there's any other site using the same tag? Maybe the income for that tag is coming from 2 or 3 sites. And sellers using the same tag on multiple sites and selling each site at a higher valuation than it should be. So that's another thing. So verifiable and also attributable to that site particularly. These two are the very important things.
Can I just ask a question? I'm just out of curiosity. How would you check that the tag isn't being used elsewhere to generate sales?
Yeah, so we have technical SEO tools like Screaming Frog, and we use Screaming Frog a lot. So it's not that difficult if you know what you're doing. Basically, we do reverse query for that tag basically on these SEO tools and see if any other site is using them. All right. Yeah, a little bit technical, but not too much, I'd say.
Yeah, got it. Good. Okay, good. Great tip. Okay, so first and foremost, verify that revenue. Make sure that it's actually revenue that's coming from that site, and that site isn't just generating revenue from somewhere else or showing you revenue that isn't attributable to that site. Both ways.
Exactly. And then we have checks, and then we have one person checking the content. How good is the content? Is it plagiarism free? Has it been copied from elsewhere? Has it been written by a native writer? Does it read well? Then we have things like, does the site have a social following? If those are legit followers, or if they are fake ones, is there engagement on the social platforms? So we got content, and then we check the backlink profile. We want a mixed profile. Like, we don't want only like links that are pointing to the site that are only niche edits or only guest posts. It's good to have a varied mix of links in the link profile. So that is good always. And also the same thing for the anchor text. That should be varied. You don't want to have only brandable or only money keywords related anchor text. So you want to have a nice healthy profile. All of that is there. Then it also boils down ultimately to talking with the seller. That's one thing that you cannot like quantify, because when I talk to a seller now, I've had experience talking to hundreds of sellers over the last 8-9 years, that I can make out if a seller is trying to make up things, or if they're genuine, if they're legit. So that's just something you learn over the years, that you can't be taught. So it's just about how the call with the seller goes.
It reminds me a bit. I've bought and sold several sites over the years, and it reminds me a bit of buying a used car. And used cars get a bad rap, right? That's why we say used car salesman and things like that. Yes,
exactly.
But it does go both ways. Like, you have to kind of do a technical test on the car and make sure that, to the best of your abilities, everything's working the way it is. And sometimes if you don't know what you're doing, I know in the early days, I would bring in a mechanic one time to buy a used car and have them give me their professional opinion. But then you also, it's very interesting to just talk with the person selling the car and talk to them about, how they drove it and where they took it, and see if it all adds up a bit. So
yeah, you get a feeling, when you talk to them, you get a feeling if, this car has been driven properly or if it's been roughed up. So yeah, you only get to know that once you talk, because on paper, you can only see so much, But,
well, good. That's the first time I've ever compared a website to a car, but But there we have it. So let's talk about Blackbook Investments and just give us. I mean, you kind of led us up to where Blackbook was created, working with friends and family, operating websites. What's Blackbook look like today? What's it offer? What's
Yeah.
its core value promise?
Yeah. So what we offer is we offer website investment as an asset class to normal people like you and me. We let's say if we know about website investing and we want to invest in websites, but we don't know where to start, or we don't know how to manage websites. We have never ever built or run websites. What do you do then? But you still want to, get the returns that these websites offer. So that's where we come in. You come to us, you tell us, hey, I'm looking to invest in websites. How can I help? How can you help me? So that's where we come in. We look at, what they are aiming for, what kind of money they're wanting to invest, what's their risk appetite, and if they're wanting to build a portfolio of sites, or if they're just wanting to buy one site. Are they wanting to get retirement money, from maybe flipping that website, or are they just wanting to get some extra cash flow every month? So based on their objectives and the amount of money they want to invest, we craft a strategy basically for the investment into websites, and then we identify the right assets for them to buy. Once done, we get them, we show to them, we get it approved from them that they're good to go with this one, let's say. So then we go ahead and do all the due diligence. We talk to the seller, we get on seller calls, we do the DD, we negotiate on behalf of the buyer, of the investor, and then we close the deal. We transfer the site to our servers, take care of the migration, everything, changing tags, all of that stuff. And once the site is with us, we manage the site for the investor. So the investor is totally hands-off, passive, and we take a fee, and then they get a quarterly payout basically from the earnings.
That is fascinating. I just love seeing these kind of opportunities available for investors. It's such a good sign for our industry as website creators and as online marketers. It's just so great.
It is. Yeah.
So let's talk about the investor side of things. And you mentioned that anyone can participate in investing in this. Like, what is a typical range of investment that someone is going to bring to the table? Is it varied, or is it set?
So we have a minimum. It used to be $50,000 until last year. We bumped it up to $100,000 this year because sites are getting expensive. The multiples are going higher and higher. So you can't really buy a good site for $50K anymore. That is throwing enough cash to pay the investor as well as our fee. So we had to raise the minimum up to $100K. So that's if you want to work with us one-on-one. So we have investors who want to put in, let's say, maybe $300K or $500,000, and they want us to make a portfolio for them, over, let's say, 6 months or 1 year. We get those. We get individuals who want to buy one site. They have $100K. They want to buy one site, like doctors, lawyers. And then there are people who don't have $100K. They have like $20K or $10K, and they want to invest in websites. So we have had to turn them away for quite a long time because it would not be feasible for us to buy a site for $10,000 that's just throwing off $400 a month, and let's say we charge $2,000 a month. It just does not make sense for us to buy and offer such kind of sites. So we had to turn them away. So what we did was this year we came up with a group buy or a fund of sorts, where the minimum was kept at $25,000, and people can participate by just investing $25K. And we pooled $500,000 worth of funds, and using those funds, we have bought multiple websites. So now it's a double win. It's a win-win because now you're investing less money than the minimum. So that's one thing, and your money is being spread over like 4 or 5 assets, or whatever number of websites we buy from that money. So even if one of those tanks, there's still 3 other sites that are doing good, and everything is not lost. Whereas if you were to buy one site for $100,000, and if that one tanks, your money's pretty much like gone. You've got to recover that. It takes time to recover it. So it's less risk and less amount of capital invested, basically. So we are doing the first one right now. And based on how that goes, we'll do further rounds in the future.
Congratulations. That sounds wonderful. That sparks for me, that sounds a little bit like, and we've talked about it in past episodes with other guests, a little bit like what Empire Flippers has done with a fund. Is that similar, or what are the differences between that?
Yes, you can say that it's similar. The structure of the business model, the structure is a little different, but in principle, in essence, it's the same thing. We're raising money, and then so in my case, I'm raising the money, I'm finding the websites, and I'm operating the websites. Okay, for my fund, for my group buy or fund with Empire. So we are an operator with Empire Flippers Capital, one of the five operators that were chosen to do the first pilot program with them, and so yeah. For that one, we raised $1 million basically on the Empire platform. Empire raised the money basically, and we had our profiles and deals listed on empireflippers.com. People can come and see and invest a minimum of 10K in each deal. And because it was Empire, we raised the money fairly quickly. Our deal was the first one to close, and we were actually oversubscribed by like $304,000. We had to send that back because the deal did not specify that we can keep the money. So we had to send that back. So we raised money with the help of EF guys. Now what we did was, after that, we had to look for deals to buy from that money. So we had to only buy from Empire Flippers platform. And so we had 3 months to buy the deals. And the last day to buy was 21st of July, like just 1 week ago. So we have deployed all of our capital. And now we're in the due diligence, we're in the migration phase and inspection phase for sites that we've bought. And once they are fully transferred, we'll start operating them. And we have a split of profit, which is like 60% goes to investors, the profit I'm talking about. 10% goes to Empire Flippers. They manage all the investor relations, they raise the money, all of that. For that, they take 10%. And 30% goes to Blackbook, out of which 23% is the carry. That's the earned extra percentage that we get because of your, operating the sites. And 7% is due to our own investment, which we had to put in. So we put in 7% of $1 million to be a part of the program. So that's how it works: 60, 10, 30 of the profit. Yeah. Whereas for my fund, we do it slightly differently. What we do is we don't do it on the profit basis, we do it on the revenue basis. So whatever we buy, whatever revenue comes in, we split it equally into 3 parts. One part goes to investors as dividends. One part goes to Blackbook as the management fee, and the remaining one part, the last part, that goes back into the growth of the sites for running link building campaigns, for content, all of that basically. So that's how we are doing it in our fund right now.
Good. A lot of details there. That's really interesting. A lot of details there. Let's focus on your fund a little bit more if we can. Or just in general, I guess we don't have to talk fund specific, but just in general as an investor.
Yeah.
If I'm bringing $100,000 to the table, let's use that number. It's a nice round number. What type of returns am I typically looking at? You talked about it's a split. Makes sense. Investor gets some money. You guys get some money for operating the site. And we'll talk about operator, by the way, because I know that's another topic that's really going to be interesting for everybody listening. The who actually operates your website, what you look for, those kinds of things. But I got 100,000. That money's got to be split between me and my return on my investment, between you, the manager, and the operator of the site. And then some of that money has to go into growing the site, because that's how you get your flip on it. So how does that split typically look? If I bring 100,000, what kind of deal are you buying? And then how much money on a monthly basis is being reinvested versus being distributed?
Yeah. So on a typical 100K purchase, we can, let's break it down by numbers. We can buy something that's throwing off about $3,000 a month. So that's like 33x that you buy it for. Multiples have gone up, but for easier, purposes, let's use 3,000 free cash flow every month that you get from that 100K purchase. Out of that, we used to charge a flat 50% of the revenue. Now we have just, changed that. So we're experimenting, so we are now doing a fixed fee model also, apart from 50% of the revenue share, because a lot of people don't want to, they think 50% is too much. So it's just probably even the fixed price is the same. It's just that 50% sounds more than a fixed, number. So let's say we take $1,500 a month to manage that site. So what remains is $1,500 for you to collect every month. That's $18,000 a year. That's 18% return. That is if we don't grow the site. But typically what we have seen is we have been able to grow the site, like 30, 40%, 50%, sometimes even more than that, in a year. year and a half, and that increases your ROI in terms of the payouts, and also when you sell the site. So our aim is to not give anything less than 25% to the investors. That is what we strive for. 30 is really good. Like, we want to shoot for 30, 33, but and that's after our fee, what the investor nets after every fee is taken care of, all the expenses have been taken care of. So ideally we shoot for 25 to 30, and we want to end up nowhere less than 25, basically, which is a very lucrative and a very handsome amount of, handsome return. And same for Empire Flippers Capital also. So we're aiming for something in that range, 25 to 30%, ideally more, of course, but we want to protect the downside. So I don't want to cap the upside, but at the same time, I want to protect the downside. So yeah, so we shoot for 25, 30% of ROI annually for the investors. And that also includes the capital gain that will come when we sell the website. So yeah, that's what we aim for, basically.
Where does the money come to invest in the site, to grow the site? That is, sorry, to invest in content or link building or those kind of things. Where does that money come from?
So we do, so depending on what management tier you choose, like $15 a month, $2,000, $2,500, $3,000 a month, depending on that, we include a certain level of content, certain level of link building, all of that stuff, keyword research based on what plan you use. So that is there, integral to that plan. But if you want to put in extra for the growth, you're more than welcome. So we have an investor who wanting to put in like 400K, and 300K, we have invested 300K already. There's just 100K more to be invested. What they want is, after our fee, whatever the sites make, they don't want to cash out. They want to invest all of it back into the growth of the sites. So they don't want anything for the next 2 years monthly. They are like, let's triple it. Let's double, triple, quadruple the valuation, and let's get out at a good multiple. So that's what. So it depends on how much you are willing to put over and above what we offer, basically. So
got it. Okay, that makes sense. Okay, so let's fast forward a couple of years. What's the typical horizon you guys are aiming for to sell the site? I'm guessing the goal is to sell the site for most of the investors to kind of capitalize on the asset growth. But what's the typical turnaround time on that sale? Or are you far enough out to even have seen that turn into something typical?
No, I'd say 2 to 3 years is what you're projecting. We don't want to hold them for too long. And we don't want to hold them for too less that we're not able to, capture the full growth of the website. So 2 to 3 years is when we want to get out.
So I've got my $100,000 investment, and you guys went out and bought a site and have grown it. Let's say that, a couple of years go by, we sell it for, I don't know, 300,000. Did nice, it grew. We got it to, $7,000, $8,000, $9,000 a month, flipped it on. Yeah. What kind of returns then? Just you might have already spelled them out, but just so that we kind of, cap it nicely. What's the type of return as an investor and as an operator that everybody sees in that kind of a scenario?
So yeah, let's say if you buy a website, we flip it for like 200, whatever, in 1.5 years or 2 years. So we keep half of the upside, 50% of the upside. So let's say if we were able to grow the value of the site from 100 to 200, we keep 50% of the extra 100 that we were able to add as our fee, if you would let's say that. And after everything is said and done, like I said, we are able to achieve, like historically, what I can say is about 28% is what we've been able to achieve in the past, which is of course no indication of what we can achieve in the future, but in the last 7-8 years, that's what we've been able to achieve on average every year for investors. So yeah,
those are compelling returns, obviously, for an investor who might be looking to put their money in the stock market or real estate or different things like that. Those kind of percentages are really, really high for an investor.
That's true.
So
yeah.
Let's shift gears a bit and talk about the operator side of things. I'm curious how you're handling operators and how you're running websites internally and how you're growing them. I mean, a lot of the people that are here are interested in growing websites, whether they start them on their own, whether they acquire them through a place like an Empire Flippers or a Flippa. And then a lot of people here are interested in selling sites they've grown and bought and stuff. So let's talk about how you're achieving that. What's the operator model look like for you guys? Is it all in-house, or do you partner with other website owners?
It's all in-house. Basically, there is no model there. So it's all in-house. We have people on the team that are operating these sites. We call them site managers, if you will, and they do end-to-end how any independent person would, buy or start a website and grow that site. So these people are, on the Blackbook team, and they have all the resources available to, grow these sites. We have in-house writers, we have editors, we have SEOs, we have junior SEOs. So how the structure looks like is we have, let's say, a site manager who is managing 2 to 3 sites. With them would be a junior SEO who is helping them, with day-to-day for those sites. The site manager usually does the strategy part of it, majorly, and then we have people for posting the content, drafting the content, interlinking stuff, all of that. And then we have writers and then we have a content manager. So the site managers will give their requirement to the content manager. If we can get those, content pieces done in-house, the content manager is going to assign them to our in-house writers. If not, if we need an expert on that, let's say a industry expert on that, we'll go out and hire freelancers who are experts in that niche, and we'll hire them. The content manager manages all of that. Content comes back to the manager, and then it goes to the site manager who review the content, and they, with the help of the junior SEOs, post the content. So yeah, it's like, over the last 3-4 years, we have been able to build a nice team, though it has been really tough to find good operators because, whoever is really good at it is probably doing their own thing.
Right. I was going to say there's a bit of a catch-22 there, right?
It is it is a catch-22. So we offer a very, a great environment in the team where, what a common pain point I've seen with operators is that, they don't get to work in the team environment. So that is a huge plus, is what we can offer, because now they're able to work with other, similarly experienced and, skilled people in the same industry and exchange knowledge. And they have the stability of the income that they're getting from the salaries and all of that. And we pay good salaries. So, and they get to work in a team environment, which they miss if they're working solo, right? So there's no risk, because all the risk is taken by me if we are operating our own sites, or or the investors. So they can actually work freely, and they can be creative about growing the sites, whereas they might not have been able to do that were they operating their own sites. It could have been risky for them at times. So that's how the current model is. We're always looking for good operators to hire and operate our portfolio of sites. So if anyone in your audience would love to talk to us about being an operator with Blackbook, working with us, more than happy to talk to them. Yeah.
That's great. Yeah, you talk about, it's none of the risk. I mean, that's a big deal.
Yeah.
Like, we kind of started off by talking about how not to get a bad deal on these kind of places, and that's probably one of the biggest restrictors for, well, that and cash. Like, I think those are probably 2 of the bigger restrictors for website owners and operators in the market we're talking about, and buying websites, is the amount of cash you need to have to get into something like that, which is restrictive for some people. And then also the amount of risk that's involved in buying a site, and hey, what's going to happen down the road as something goes. So let's talk about, you get the privilege of seeing a lot of different websites, and being tasked as an owner of this company with growing a lot of websites for investors. What do you look for in a site that you're purchasing? What are the specifics? I'm really trying to think of people listening to the podcast who have sites they're thinking about selling. What types of things, maybe I should ask it a different way, what types of things can they be doing to make their site really attractive to buyers like you? What types of things are you looking for that separate good websites from websites you pass on?
Yeah, honestly, when we look for websites to buy, we have very stringent criteria. When you buy sites, we ideally look to buy sites from people who don't build sites to sell them. We want to buy sites from enthusiasts, who are really passionate about what they're doing, who are experts, in their niche, or who just are so passionate that, it shows in their content. So those are the people we want to buy from, who have done this as a passion project, or, not for making money. And it just so happened that it turned out to make good money for them because it was their passion and they did it so well. So those are the kind of sites we look to buy. And it's easy to spot them because, the quality of content you'll see there will be totally, on a different level than what you would see on a, let's say, generic affiliate site, that has been built to sell. Because, we can identify, good content from bad content. The level of engagement that that person has with their audience, that would show in the comment section of that site. So I think, that's if the person has, started that site just because they like that industry or the niche without any other intention, that's the kind of website we want to buy. If you're starting a site with the aim to sell it, that's something you probably might just, pass over, to be honest. So even for, your audience, I would say if you're doing something, do something that you're really passionate about, even though in the back of your mind, you might think that you might want to sell it in a few years, but put everything into it. If you're really passionate about golfing, then it should show in that, on that website that you're doing, it should come across that, okay, your enthusiasm for that does really speak. Have your pictures there, have photos, have original photos there, not cookie cutter content, not stock photos. It's all about being authentic and differentiating yourself these days. So the more genuine you can come across as, better your chances for a sale. And these sites, they don't come to the market that often. And when they do come, they go for way higher than what normal websites go for. So, yeah.
And as you look to grow on the websites you buy, right? So you're looking to grow them. You've got an investor or a team of investors, group of investors. I mean, the need to grow that site is very real. I can imagine, right? This isn't
exactly.
I own I run a marketing agency, and so I have a couple of websites. But if I don't get around to publishing content on them this month, it's not the end of the world. If they don't grow this year, that's a bummer. But I'm not really paying my bills with it. But when you've got a team of investors, like you've got to get those returns, and you've got to get them in a time horizon. So I'm really curious, like, what are you doing to, I don't want to say short circuit the growth process, but what are the things you're looking to do that really do lead typically to hyper growth? Again, and these kind of things can probably be applied for whether you just buy a website or whether you're just taking a fresh look at your current website.
Yeah, it actually boils, it's not rocket science. It boils down to just a few basic things, to be honest. Solid keyword research, based on what that site is capable of, based on the DR and the metrics the site has, then creating really good quality content, not skimping out on on the content part. Put lesser number of pieces out there. It's all right, but put really good stuff out there. Don't put half-assed stuff there just so that you want to make volume. Don't do that. Maybe publish one article that's really good and solid in research, and maybe that costs you thrice of what a normal article would cost. But don't do 3, do one of those, that will give you the results. Then there's 2 ways about, link building. Some people want to do it. Some people think that, it's a waste of time, whatever, but they do help expedite the process. We are here on a clock. So we run link building campaigns and try to get really genuine, authentic links based on the quality of content, because if we don't have good content, people are not going to link to us. So we really do good with content first. And then we go about, trying to acquire links for those as organically and as white hat as possible. That expedites the growth process for us. If I had all the time, I might not be going that heavy on link building, but we are on a clock and we have to give returns. So good content, link building campaigns, and then just improving the structure of the site. There's a lot of on-page stuff you can do, which most people don't realize that they have to do, or they don't do it. Interlinking existing articles, interlinking new articles from the old ones, going back and linking the new ones from the old ones, get them indexed faster. Creating silos, that works really well. You have categories on a site. If you can create silos and interlink the silos, that does really well with Google. What else? The basic stuff, optimizing, metas and title tags, and having, 1H1 on the pages, having alt text for all the images, attributing the images to the owner, all of that stuff. So it's not rocket science. It's just got really good content, and just you being persistent in putting out that good content and getting it out in front of as many people, either via outreach or by social, if that is a social friendly site.
Let me ask your opinion on, you mentioned controversial, or at least highly debated, right? Let me ask your opinion on another debated topic and how you guys approach it from your vantage point in growing sites. And that's this concept of EAT, which is Google's acronym for expertise, authoritativeness, trustworthiness. You talked about buying sites from, people who have a passion, people who care, people who write the content. Maybe not from an expert standpoint, but certainly from a really knowledgeable standpoint, not just from an intent to sell the site. How do you guys, pay attention to these kind of signals, these EAT signals? How do you bring those signals? Is it not something you really worry about because of the flipping model you're in? I'm just curious.
No, so we do pay attention to that, definitely. If it's a topic that our in-house writers are not experts at, we'll go and hire experts, and we tell them that we'll give you attribution on the site, and we'll even put a photo of you on the site, and in most cases they're happy to do that. And since they're experts in their field, that all automatically gives us the EAT edge there. And for generic sites that don't need any experts, we use our own authors at times on the sites. And like if you're reviewing, let's say, bicycles, I mean, you don't need to be an expert reviewer of bicycles. I mean, you and I can review bicycles if you were to do that that way. So we are taking into consideration more and more now the EAT signals, and trying to hire more experts in that niche and give them the attribution. So it's a win-win for both. They get more coverage, more exposure, and we get to have an expert on the site.
Yeah. So basically, and that makes a lot of sense. So basically, maybe if you have a fitness site, that's a category where Google definitely, has shown signals that they prefer trainers, fitness experts, these kind of things. You're going to go out and work with someone who's a published expert, maybe has certifications, those kind of things in fitness. But if you're reviewing dishwashers, you're saying we don't need
experts for that.
Yeah, you don't need an expert for that, and you can kind of pay less attention to those signals.
Exactly. That's right.
With link building, you mentioned link building helps accelerate the growth of a site, which is really valuable for you because you're on a timeline. What types of link building are you guys doing? Is there a typical type of link building? There's obviously different types. There's guest posts, outreach. There's link insertion or niche edits. There's kind of creating really authoritative content, like a skyscraper type of content. There's different types of approaches. What are you guys seeing that's working?
We do everything. We do it across the board. Yeah. So that the link profile is mixed, like we discussed initially. We don't do only one type of strategy. We do a mix of everything, to be honest. Generally tends to work well.
Good. Okay. So, the time has come to sell this site or these sites. The growth has been there. Where are you guys looking to buy and sell the sites nowadays? Are there are you building up a network of off market type of deals? Where are you guys looking right now?
So for us, when we're buying sites, we of course look at all the platforms like Flippa, EF, brokers, and the thing is, most of our deals happen, the deals that we buy are mostly off market, because those are more often than not, those are better deals. If you know what you're doing and if you know your due diligence, those are more often than not better. And you get them for slightly lesser price than what you would pay if you were buying on a platform, because the brokerage is involved, that will place the price. So we have a network of people that know us and we know them. They know that we buy sites. So we get inbound deal flow all the time. We have people looking out for deals for us, and they keep sending us deals. We pay them a nice commission if we do a deal through them that's off market, so we get more deal flow. And same thing for selling. We have a good network that wherein we can sell the sites within our network. We don't often have to list on platforms, or we can just we have a lot of investors coming to us, so they are always looking to buy sites. So if an investor is wanting to sell a site, more often than not, that deal will happen within my network. Within a new investor comes in and buys an existing investor's website. So it takes time to build up that network, but I would say I have a fairly decent network now that I can do the deals within the network. Still, it's really good. It's tough to come by really good sites. The deal flow is always a shortage of deal flow. So yeah.
Yeah, it sounds like at the end of the day, it's really all about finding those specific sites that meet your criteria. And, I'm not hearing you say the multiple is vastly important. These kind of things are less important. The most important thing is finding a site that is built. Yeah.
Right site to buy. I don't mind paying more for that, to be honest.
Yeah. Good. We've covered a lot today. I mean, again, just to kind of recap, you have this investment group that pairs investors up with websites and the website buying space, and then you operate those, grow those, sell those on. And so I think it's really been interesting to learn about what an investor is looking for, and then also learn about how you're operating these websites, how you're growing them, the time horizons, all that kind of thing. Is there anything that we didn't talk about that you think is really important, or anything I didn't ask about?
I think we covered a lot of ground today, to be honest. And we talked about the funds that we're doing with Empire, with Blackbook's own fund, how we operate, what's our philosophy when we look at sites. To be honest, I think we probably didn't discuss where the market is going. So maybe
that's good. Yeah. Actually, you have some good insights there.
Yeah. So I think content sites are still going to be around for a while, and the models might change, but they're going to be around for a bit. A lot of people have, been out of market now since Amazon cut their commissions last April. So that has done a lot of filtering. So now only the serious people are, in the market right now, and I would say the hobbyists, they were just dabbling into it. They have, been filtered. So I see multiples, of course, rising for maybe a year or 2 years, because cash flow is always king, and people are always looking for cash flow, and that's why we see deals happening at 40, 45, 50x even these days, because there is money. It's a seller's market right now, and there's money that people want to pay to buy really good assets, and they're not hesitating to pay premium for those. So it's going to go up in terms of multiples for maybe a year or two. That's what I feel. And it's going to stabilize, because at one point it cannot go any further up, because the risk would be too high to buy assets at that price point.
Right.
If it's a 5x or 6x multiple yearly, now the risk is high, because you are still at the mercy of Google or Amazon, whatever. And the returns are not that great anymore, because now if you're buying at 6x, you're expecting 16% annually if you don't do anything, if the site doesn't grow or if it doesn't falls. So that is becoming less lucrative. Whereas if you buy it for 3x, we're looking at 33%, which is double of that. So at one point they'll stabilize, or maybe, there might be a slight correction in the prices. But I think it's going to go up for the next couple of years, I think, because there's more and more people entering the market, more money flowing into the market. So it's it's a seller's market right now. And as more and more people get exposed to this asset class, there's going to be more people like me coming into the market, offering their operating services to investors. So it's really, I would say, primed for growth. This industry, there's more money, there's more people doing it, and like Empire Flippers Capital, EF Capital, what they're doing is really good. They're bringing more exposure to the industry and making it, taking it to a whole nother level, because they are one of the biggest players in the market. And if they're doing something like that, pairing up investors with operators, I think there's more people who are going to come into the market with the same model, I'd say.
You talked about what the Amazon associate, rate cuts have done to maybe the person who's dipping their toe in the water, right? And it's not as attractive and lucrative anymore. There's also a lot of other monetization methods. What kind of monetization methods are you guys most interested in, or are you most looking at? I mean, there's Amazon, there's ad networks, there's premium ad networks, there are other affiliate programs, and then there's other ways to generate revenue, whether it's info products and brand creation, all that kind of stuff.
Yeah, exactly. So going forward, we're only focusing on buying assets that are, that can be brands in themselves, or if not brands, they can be mini brands in that niche. If it's a welding site that we're buying, it should be maybe the top three among the top three welding sites in the world, because that's a small niche and it's not too tough to be the top three or top five welding sites. So we're looking at only buying sites that we think will be around for another 5 years at least, and that can be turned into mini brands that have the potential for additional revenue streams. Like you said, products can be digital products, can be physical products, have the potential to do email marketing, collecting emails, all of that. But right now, what we're looking at when we buy sites is, of course, diversified streams currently when we buy, and scope to add more streams in the future. We don't want to buy sites solely monetized by Amazon. So Amazon can be a part of revenue, but not a major part. Or even if it is, we should be able to add a new stream of income right away that will reduce the percentage of Amazon income, basically. So, and the second thing is we are really bullish on these premium ad networks. So all the big companies, let's say Google, Facebook, they all make money via advertising. So ads are not going away. So I'm very bullish on that. So we're slowly trying to buy sites that are more monetized by premium ad networks like AdThrive or Mediavine. I think those are relatively safer than buying an affiliate only site. Best would be a mix of both, like Amazon and a few more networks, affiliate networks, and then ad income from premium ad networks. So yeah,
that's great. Yeah, and all those different avenues of revenue make it so that there's even more reason for people to buy sites, because it diversifies the risk. You talked about the risk and how as multiples grow, the risk increases.
Yes.
And the good news, though, is there's a lot of different ways to monetize these sites and to add new streams of revenue. And so it does sort of balance itself out in the end. Or at least that's the hope, right?
That's the hope.
Yeah. Well, Mohit, it's been a wonderful conversation. And I have to say, my mind is, I really enjoy these types of conversations, because it really, you mentioned it in the podcast, you can just get so head down as maybe a single website owner or a single website operator that these kind of conversations are really fun, because you can see what's going on in the world in the bigger picture. Exactly. And in how investors with a lot of opportunity, a lot of money are viewing these types of websites we're all building. And what I've been doing it for a little while now. What a different conversation it is from when, like back in the early days of 2010 and 11, when you started buying your first site on Flippa.
I know.
And look at what's happening now. It's fascinating.
Who would have thought? Yeah, exactly.
It's great. It's just great.
An asset class now.
Yeah.
It is.
Well, and so let's see, just catch everybody up on where people can keep up with you, where people can reach out to you. You did mention that, you are always looking for SEOs to hire and whatnot. Exactly. Obviously, if an investor happens to be listening to this, what are the different ways people can reach out to you and follow along?
Yeah, just email me at mohit@mohitater.com. Or you can, just go to blackbookinvestments.com, fill out the form there. For investors, we have an investor questionnaire. They can fill out the form. If you are looking to sell your website, we have a form for that. You can just, fill out the form and add details of your website that you want to look to sell. And if you are looking to apply to work with us, you can, just email us at jobs@blackbookinvestments.com. So yeah, and I'm on Twitter at Mohit Tater. So yeah, anywhere is fine. I'm not too hard to find.
Yeah, I was gonna say there's a lot of different ways to get in touch with you, it sounds like. Great.
Yeah.
Well, it's been really a great conversation. Thanks so much for joining us today. And until we talk next time, be well.
Thanks, Eric. Appreciate it. Take care.
My pleasure. Yeah. Talk soon. Bye-bye.